take a look at how markets in Namibia have performed. The overall Namibian index, which of course has lagged the domestic index when it comes to year-to-date performance. We'll see that graph up on the screen. 942 points, sitting flat for the day. Taking a look at the local index, and as I said, being an outperformer, 272 points, up by just over 0.1%. And a quick check-in on the currency, trading at 8.69 against the United States dollar. You're looking at slight dollar strength, but that's a greenback strength right now. Let's move over to our Namibian studios, the NBC studios in Windhoek. Rome Mostert, Head of Research at IJG Securities, joining us. Rome, thank you so much for joining us today. Let's very quickly touch on the outlook for the interest rate decision going forward tomorrow, because keeping in mind we've had inflation quickening to 7.1% in October. That's, of course, a lot higher than the repo rate sitting at 5.5%. But as the governor there often cites the fact that they have to keep in line with what we're doing here in South Africa, taking often cue from the direction of interest rates. And at this point in time, it's not likely that we're going to have an interest rate hike. That's what most analysts are saying. So what are your expectations for the interest rate decision tomorrow?
Yes, I think in addition to the high inflation rate, we also have credit extension growing at about more than 16% year on year, which is also a bit of a concerning factor. But looking at inflation, it's mostly driven by food and non-alcoholic beverages, both up about 10%, and then also transport and housing utilities moderating somewhat, but also still up more than 6% year on year. So basically, I feel that that these price pressures that we are witnessing is nothing that you can really do about from interest rate perspective. And for now, we are still set on following South Africa and maybe unchanged tomorrow.
Perhaps that leads us into discussion on asset allocation going into 2013. Now, just looking at bond market returns sitting at 10.4% so far for 2012. What are your expectations when it comes to appetite and investing in Namibian bonds next year? And of course, keeping in mind Namibia just launching the bond here in South Africa, and that of course based in rands.
No, I think if you're interested in Namibian bonds, you can get a nice yield uptick, spreads ranging between 70 and 100 basis points over the South African benchmarks currently. This in an environment where yield is quite scarce. I think we are still relatively attractive with minimal risk when you look at the states, the fiscal affairs and so on.
Yeah, so basically when it comes to the equity front, we've seen, as I was saying earlier, the local index being by far the outperformer in assets this year, 30.7% return there, and the overall index only 13.3% return. And that, of course, very much geared towards the fact that we have the likes of Anglo American being an underperformer. But take us through so far the stars of 2012 when it comes to local market stocks.
Yes, basically from a sector perspective, the industries that outperform was basically your food producers, life insurance, some of the banks, and then also your food retailers like a ShopRite. So basically, as I've said, you have your Oceana Group, I think, was a leading performer in 2012, with Sanlam, Old Mutual close at around 45% total return year to date. And then also ShopRite following them closely, as is FirstRand and FNB Namibia as well.
So, I mean, what are your expectations when you go into 2013? Are you looking at growth stocks, or are you looking at value stocks? And where would you be putting your money next year?
Looking at the global economic backdrop, and we are still seeing some earnings revisions downward revisions coming through. GDP revisions are being revised lower. CPI forecasts are not that concerning yet. So for the moment being, we view the global economy as in a slowdown phase. And as a result, we are preferring growth stocks to value stocks for the while being. That said, we will keep a close eye on these revisions. And the moment it starts picking up or shows that it is bottoming out, we will consider moving into your value counters or your cyclical stocks. Mm-hmm. I think for the moment being, that will only occur when the likes of Anglo American is trading at higher PEs, like 18, 20 times, and growth is a bit more certain coming through. So for the moment, we recommend keeping with the momentum stocks, buying the winners, selling the losers until there's a significant change in those revisions that we've talked about earlier.
And of course, talking about Anglo's stock, I mean, it's down 15.5% on the local market there, and uranium miners down 50%. So those certainly have been the dogs of 2012. And as you say, potentially could see some upside next year, all based on where the economy is headed.